is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 66. NASDAQ is off 6. S&P's down 3. Gold contract down $1 at $15.10 an ounce. We have silver down 5 cents, $17.98 an ounce. Light sweet crude, bottom line is taking it on the chin, down $2.76, $60.13. Now, no doubt, light sweet crude, guess what? It had opened $10 up yesterday. Pulled back, was only $5 up. What it hadn't done, folks, and this is a big deal, is that it couldn't take out its swing point. It got up to a price point of 63.38. That swing point is 63.87. That's saying that someone is just laying there, selling into that market. And I think if I owned an oil field, I'd be selling into that market at 63 bucks myself. Notes and bonds. You had the 10-year note up 6 ticks, trading 129.08. 30-year up 14 at 159.13, and King Dollar down 135 ticks, trading 98.04. The euro is at 110, the pound is at 122, and the yen is trading out here at 108.20. We get the Federal Reserve coming out tomorrow at 2:30 with a statement as well as a news conference. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. If you haven't test driven yet the Thinkorswim platform, folks, real easy to do. As you're at our website right now, just hit that banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. You want to understand option strategies, futures, defined risk. It's all there. Kevin Hinks, what's going on?
Good morning, Tom O'Brien. You know, today is kind of the quiet before the storm, although you wouldn't know that if you were trading the oil market right now, because that's some pretty serious action. And, you know, for all your viewers, I want you to think about something. Where would oil have been if this was 10 years ago and something like this happened? Where would the price of oil have gone during that period?
Right.
And, you know, I mean, and the fact that it only broke 60 for a day or a third of it, you know, most of a trading day, and now we're right at the 60 level, trading just below it. It tells a pretty big story about where we are in crude oil production in this world right now.
No, there's no doubt, Kevin. And you know what's amazing, Kevin, is that, you know, if picture, you get the Saudi fields getting attacked. The S&P just shakes it off. I mean, it just like shook it off, you know. And yes, granted, folks, oil did jump, okay, but guess what? That's not a lot when you can't even reach a swing point. It just isn't, you know.
Exactly, and I mean, you would have thought 60 would have been an afterthought.
Sure.
You know, and 65 would have been an afterthought. And the fact that, I mean, don't get me wrong, you know, that's a pretty big move for a futures market in a day. I don't want to downplay it, but looking at crude oil, 60 bucks, man, it was $70, $75 not that long ago with much less going on, frankly, geopolitically in the world, right? We've got Iran, we've got Venezuela, now we've got Saudi Arabia, and still, all this considered, we're only getting to right around $60. It's an amazing turn of events in crude oil trading.
No, there's no doubt. And, you know, it seems, you know, we've been talking about the note and bond market, the dollar. And, you know, I mean, notes and bonds, they came down hard. I mean, this is a tricky market right now. You know, you got a bounce yesterday, but even under that bounce, I'm saying to myself, that note and bond market didn't have much volume on the way up. So it's like, hey, man, I don't think this note and bond market wants to go higher at this particular point. I think we're going to test of a low, and the dollar, of course, is still a toss-up. And what's intriguing is that I would say that it doesn't mean that we can be right in our speculations, but there's very few times that the market is showing so many different levers. Like, okay, where do you want to go, man? Do you know what I mean?
Right, right. I don't remember a time in my career, Tom, where trading, you know, the macroeconomic instruments like the dollar and crude oil and bonds and all have been so important to driving the overall market all at once, right? Brexit is affecting currencies and the U.S. dollar. Obviously, everything that's affecting crude oil. Grains are being affected across the board. So it's just a fascinating time to trade in arguably what's been one of the best third quarters. Remember, because that involves July, August, and September that I remember in recent times. There's never been more volatility in this time, in this third quarter than we've had this last 3-month period. It's pretty amazing. Actually, it's kind of exciting. It makes me look for. I think the fourth quarter might be another great trading quarter for these markets.
No, I agree. And switch gears in for a second. But what was really intriguing to me is that you had the copper market and the iron ore market come off its lows with some real strength. So that's like saying, okay, that's all about China. If this thing is real, the physical metals, folks, the base metals, they came off with volume. The equities, the two biggest equities with copper, it's Southern Copper. That thing basically went up 10 points. With iron ore, it's Valley. That thing, went up 3 or 4 points, but that was like from $8 to 11. So it's like, okay, man, are we going to get a commodity bull here? Is this the beginning? And does that mean that no matter what is going on in China, that somehow or some way, and I don't have a lot of faith in this right now, but it's like I like the idea that both of those base metals came off the lows, because it's like, okay, man, that's saying something.
Right, because both those metals that you're talking about, and especially I watch copper pretty closely because that is such an industrial metal, and you're right, Tom. The dots are connected right to China when you look about copper and when you're trading copper, because much like a lot of these commodities, China is the variable in terms of demand, right? When China takes off these commodities, the demand for these economies or for these commodities are all going to pick up, and I think that's where those dots get connected, and that's why China's stimulating their economy. They're trying to do whatever they can to get their economy moving, and if it shows up, if it starts to show up in the numbers, it's going to show up in copper and some of these commodities because of the demand out of China.
Yeah, no doubt. So what are we going to be talking about in the program today, Kevin?
It's very thin this week in terms of earnings. But the good news is it's not really – we have a couple of good names. We have Adobe after the bell. We've got Chewy after the bell, which is a newer stock coming on the market. And then we've got two other names that we're going to be looking at. So in a week, very thin with earnings. On a day where we're waiting for the Fed, day one of the meeting, normally a pretty slow day, we've got some good earnings to look at today. It's very late in the earnings season, mid-September, but we've got 2 or 3 good names we're going to go over today in terms of earnings.
Yeah. And, hey, Tommy and Kevin, what do you think about, you got the bottom line is that WeWork's not going IPO, right? That's like a, whoa, baby, right?
Yeah, they've got some problems. When your largest investor, SoftBank, says, hold on a minute, I guess you listen.
Yeah, no doubt.
For sure.
Listen, folks, right here, 45 minutes from now, outstanding program. You want to understand option strategies, futures. Check it out. Kevin, you have a great day, safe day, and we look forward to speaking in 45.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow down 43, NASDAQ off 4, S&P's flat. And, you know, Tom, this WeWork deal, can you imagine that?
Oh, man, right?
Seriously, right? So if we go back, folks, like 3 months. 3 months ago, Goldman was basically putting out there that they could get, a market cap of $65 billion. Fast forward to 6 weeks ago, we're talking 20 to 15, and fast forward to last night. And bottom line is that now you don't have an IPO. They're saying that they're going to try to get it out in October, which is not that long, actually. But you can see what is the story going to be now, right?
And had you seen that? So this ties to their bond offering in terms of part of what they had come to, and I'm trying to pull up the exact verbiage as we get into here, because part of what their recent debt round was going to be contingent on was going public by the end of the year.
Yes.
And raising, I believe, $3 billion from their IPO. And so they were not going to reach that level. And I'll get it up. So there's a lot of moving parts that go into it when you have a company that the most recent round of funding from SoftBank valued it at $47 billion. And I don't have the article up there yet.
Yeah, no, I get it. I have it right here. So it has that. What Tom's talking about, folks, is that the delay. So still, the value of WeWork's bonds sunk the most on record this morning on concerns that the cash-burning company will miss out not only on the $3 billion that it had planned to raise in the offering, but check this out, man, an additional $6 billion credit facility tied to the successful IPO.
Do you have a dim screen? I'm not sure anybody's seeing it. I hate to interrupt.
No, I don't.
Okay. I didn't realize. Go ahead. Sorry.
So they don't get the $3 billion. They don't get the $6 billion. Well, this is what's going on. I can see why they want to have to do this by October, because this must be carried out before December 31st to get the loan.
And that's what I had said. By year end, they were supposed to be having an IPO and raising a specific amount of money. And that's so it's pretty remarkable that not only are they dealing with the woes of an evaluation that's now at 12 billion, 15 billion from 47.
Right.
But they're dealing with, they need money, and the money they were going to raise outside of the IPO is now, seems like it could fall apart because they're not going to get there. So I imagine they may try and come back to this by year end to secure that debt offering.
Yeah, no, I can see that, no doubt, because what you also, now check this out, folks, this has repercussions for SoftBank also, because in the same article, what it's saying is that the aspect is that one of the big funds in Saudi Arabia, Abu Dhabi, okay, which had invested $15 billion in the initial fund, is now saying that they're going to bring their new commitment under $10 billion. The bottom line is that what's happening out here, folks, is that you have large investors inside of SoftBank worrying that one bet was too big for the size of the actual first fund, which was $100 billion. That's when you cut to the chase, like, okay, man. Because could you imagine the thing? I think that's going to be amazing out here is that the aspect of, analysts were looking underneath the sheets. Could you imagine what they're going to do now?
Yes.
Meaning, okay, what else is out here, folks? Okay, when folks go IPO, they like to basically push this out as fast as they can. They get everyone riled up, like worrying that we are going to miss the profit, right? You got to work on the greed there, right? Pretty intense. We got a call, Tom. Let's go to Lou in Spokane, Washington. Hey, Lou, what's going on?
Hey, Tom and Tommy.
How you doing, man?
We're starting to get into fall here.
Oh, that's a beautiful thing.
Yeah, well, usually the sign is you get a week of rain. I mean, all summer we don't get any rain at all, maybe a fraction of an inch. And then when fall comes, a week of rainy weather comes.
I can't wait to get into fall, or at least what's actually happening down here.
That.
Well, what's actually happening down here right now, which is pretty cool, is that what we did do is that today is about 3 degrees, and I know that sounds like nothing, folks, but in Florida, 3 degrees, with 92 to 88 is huge. So right. It is. It's, pretty wild. So what are we going to look at?
Well, Tom, a couple of days ago, you were talking about gold in relation to the currencies.
Yes.
And how gold will beat the currencies over time. I got a big one here. I think that it's gold in relation to all the financials, and we got this $250 trillion debt that everybody agrees is not going to be paid off. It's either going to be defaulted. If it defaults, gold goes to the moon, right? So there's no problem there. But if it's inflated away, which is what they usually do, you got a wasting asset there in real terms of 200. And I personally think the world debt is a lot higher. I believe the Fed is doing things off the books. But in any case, even if you go with the 250, you can look at all the financial instruments that exist out there and consider that a piece of each of those instruments is this debt that's going to become worthless over time. So, what that does to the gold market, I'll tell you, I've never seen anything like this as an environment for the precious metals. So
I would agree with you at the aspect that I like the environment right now for the precious metals, right? The debt aspect, so watch how this goes. So the debt aspect, right? If we're looking at a balance sheet, you have to look at both sides of it. And so the debt aspect is astronomical, okay? But on the asset side, you got to look at what the United States of America has, meaning the infrastructure that's already built, the parks that we have, the oceans that we have, the minerals that we have. So I'm not in the camp that this thing is exponential in the aspect of the debt we have versus the assets we have. And the reason being is that, if you go to many other countries, right? Some, like let's say if me and Tommy are just going down the highway and we see a big construction job, not huge, just big, okay? There's plenty of other countries, they can't even do that, So to me, when we talk about the debt, you have to talk about the asset value on the other side. Now, that being said, that doesn't mean that the value of the dollar is going to continue lower. That's fundamentally, that's what will end up happening. It always happens. I think what we have here in the precious metals is that because of the fact that we're still dealing with rates that are very low and very well may go negative, well, guess what? That means that if you want to basically just stay at value, well, gold stays at value. You know what I mean? So, cooking, brother.
Okay. Well, thanks, Tom.
Stay cool, man. Stay right there, folks. Tommy and I are coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 32, Nasdaq's off 7, S&P's a flat, and it almost looks like the market's going to sit here for a while and figure out what the good old Fed's going to do tomorrow. Maybe I lost Tommy. Last
Maybe you
night,
got
folks,
me now. You got me?
yes, sir.
Okay. Somehow the mute button got hit.
I was just going to say that it's amazing that we have Fed Week going on. With everything else, it almost has gotten lost in the shuffle. Not really. But, yeah, the meeting starts today. We get, of course, the announcement tomorrow. And pretty interesting that we have that going on, as it's kind of just like I said, with everything, with oil, with the market. It's kind of almost, I don't want to call it secondary because it's definitely at the forefront right now, but pretty remarkable.
It is. Something that's at the forefront, folks. Now, this is a little complicated, but there's been some high volatility in the repo market and the Fed funds rate overnight. You know, I brought this up yesterday in the afternoon show. You know, when you look at the Fed fund futures, let's just bring these up for a second. So this is the way that it's supposed to work. If we bring this up, what you're going to see is that when you look on the right-hand side, you're going to see the effective rate, 2.25. Now, what's intriguing, that's been running at 2.15. Well, that's based on the rate of 2 to 2.25. What had happened, not last night, the night before, is that the overnight rate went up 150 basis points over the 2%. It went to 3.5, okay, which is a problem. That first off, it's not that it doesn't supposed to happen. It means that what the article was saying is that there were so many large corporations that were paying their taxes that money came out of the banks. The banks needed more money in order to keep their books level. Not last night, the prior night, okay? So there was more demand than there was money on the overnight rate. That being said, and so you always got to pay attention to that because that's a liquidity deal. So it's like you imagine percentage-wise how much more they paid. Now, what happened this morning is that the Fed was out buying bonds this morning, and then they came across and says, oh, okay, hold it. We got to delay this because we have a glitch. I saw this. I said, oh, my God, you got a glitch? Bottom line, the glitch is gone, folks, and the Fed came out this morning and bought $59 billion in bonds. But it's really intriguing, Tommy, because it's like, okay, how does this work? You know, what does this really mean? You know what I mean? It's like,
yes.
This is a bad time to basically have glitches in the market because liquidity in the market is all about the Fed Reserve keeps liquidity going. If you basically don't get liquidity going and you get people nervous, then it's like, oh my God, hold it. I need my money right now. So, so this is going to be pretty wild watching how this whole thing shakes out. And it's affected a few different markets, you know. We'll see if it actually does get serious. You know, it's intriguing, Tom, too. I'm looking at this Fed fund futures and look at this today. You know, we actually went down again. That meaning, let's see, did it? Oh, no, it's at 100% again. Okay, it's at 100%.
Yeah, and it was kind of sitting right at that, I think, when we wrapped up our program yesterday, at least. I'm not sure if it might have oscillated a little bit last night, but as in about a 95% chance of a 25 basis cut and a 5% chance of a 50 basis point cut.
Yeah, so, hey, I guess what we're going to get here is that we're going to get the aspect of what is that statement going to be and where is it going to come out? You know?
Yes, for sure.
The oil deal, folks, so that the number of the oil deal, you know, right now you get oil down at 290, you trade, no, you get oil, oh my God, look at this. Oil's down 376, you're at 59.17. And what that's all about is that you had an article coming out saying that the bottom line is that they think that the Saudis can get 70% of their lost output online. So if you're trading oil, God bless you, folks. Bottom line is that you're at the whim of public relations. So it's like.
And I had actually seen, I think, one of the articles, I got it up here in the den, was talking about that the kingdom's oil output will be fully back online in the next 2 to 3 weeks, Reuters had reported.
Okay.
So that, I believe, was that right, and that article coming out, I think 9:35 maybe, or that news breaking, and that's where you get the drop from $62, and in the span of 10 minutes, you go from $62 down to $59.32, and we're now even below that level. And if you believe it, then yeah, not a big deal. But as we talked about kind of yesterday, right? It's amazing, and I was reading some articles today in terms of the amount of money that Saudi Arabia spends on arms in terms of tens of billions of dollars.
Right.
that you are unable to protect what you could consider your most valuable asset.
There's no doubt.
From a small drone attack that you had to potentially, not even potentially, let's avoid that word, that you had to see coming. You don't have to be a genius to realize that, there's vulnerabilities to drones flying over and dropping bombs on an oil facility. And when you're spending tens of billions of dollars for quote unquote security, defense, how does that happen? And is this something that we could see happen again?
Yeah. I mean, it's a big deal. There's no doubt it's a big deal because the reality is that they got hit good, and why can't they get hit again? It's like really some of the higher volume equities out here. Let's take a look at them. We had a low volume market out here yesterday, folks. Right out here this morning, you get Chesapeake Energy's up 21 cents. Whiting Petroleum, which was up $3 yesterday, is down $1.45 today. Kraft Heinz, that's still in the dumps. That's down $1.14. We got Marbell's off 29 cents. Nothing heavy there. Halliburton's down $1.23. We go inside the Dow Industrials and see what we have inside those Dow. Strength versus the weakness out here. So you get, we're right now, you're trading down 29 points. We got Big Mac is putting 20 positive points. Procter & Gamble 13. Travel is 10, taken away from it. Goldman 21 negative. United Health 15. 3M 12. Inside the NDX 100, which is a weaker indice. The leaders out here, look at this. American Airlines up 3.9%, but that's a dog anyway. That's up $1. You get Alta Salon up 2.46%. United's up 2.2. United is strong, man. It's a mind blow. When you look at this United chart, folks, okay, this is all about, even yesterday, okay, so that comes down to only $88. And when you look at this chart, Tom, it's like, man, this thing is just laying at highs. And this is, bottom line, this is all about, Boeing. This is, United has the planes. They weren't, as dependent on those new jets as the other airlines were,
Yes, huge, right.
Taken away from the NDX 100, you get Kraft Heinz down 3.8%. You got Mylan Pharmaceutical off 3. Wynn down 2.64. Well, we got to talk about Wynn. And I will see if I can get this chart up. Tommy sent me a chart last night, folks. Oh, my God.
Let's see. I'll be able to find it as well, at least by the break. We have a break coming up, and it's Macau gambling versus Vegas gambling. And you want to talk about gamblers, man.
When you see this, okay, it's day and night. I mean day and night. It's like they should just shut down Vegas. Stay right there, folks. Tommy and I coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow down 30, NASDAQ off 6, S&Ps are flat. And, folks, as you come over to our website at TFNN, right on the front page under featured content, you're going to see the gold report. I'm going to be doing a subscriber workshop tomorrow night. You can be in this workshop. It's 5 to 6 Eastern Standard Time. The way you come in the workshop, you just hit the gold report. You're going to hit subscribe, and you can get it for a month for $97, 6 months for $449, a year for $785, which is a savings of $379. And what we're going to be talking about here is that the next leg up in gold, $1794. Find out why. So check it out, folks, on the front page of TFNN. You get a great report as well as a great workshop. Gambling. Macau versus Las Vegas. This is if you see this chart, folks, this is amazing.
Pretty
Isn't
cool.
it?
So credit given, they covered this on Bloomberg TV yesterday, which is how I found it. But man, oh man, I mean, we always look at Wynn, which I thought of initially when I saw this, right? Wynn, of course, huge presence over in Macau. They sometimes live and die with how that Macau gaming revenue seems to sort out. And you look at this chart and you understand why. I actually had to zoom in. Now, when I had it up on the Bloomberg terminal, and Tom, if you just press on yourself while we look at this, if you just press G and then go, it'll bring you to your own graphs. And I saved this one on the bottom. And what's kind of cool is that you can see the interactivity when you have it live, because I had to look at this blue line across the bottom. I said, has this thing even moved since 2004? And
look at that.
It has marginally. Like, I think some years it was at 275 million for gaming revenue, but we're talking about, these are in millions of dollars. So the Macau revenue peaking at almost $5 billion. Now, again, this is where I want to dig into it, because it's
that's
revenue.
In millions of dollars. That is hard to comprehend.
It sure is, man. And I wanted to get, of course, I love the details. This says something about Macau revenue month. Okay, so maybe this is monthly, what it's averaging for the year, or maybe this is per month. I'm not sure where this data is pulling in, but nonetheless.
Well, they do report it. Legally, they report every month the revenue coming out of Macau, because of course the Chinese government wants their tax on it. So that's we get numbers every month. So maybe that's what it is.
I mean, no matter what, right? Staggering to see. And that's where, I mean, Nevada, Las Vegas, they make more money now outside of gambling, right? In terms of just entertainment, restaurants, shows, things for children, resorts, room fees, what it be. And you can see why, because man, oh man, they are not growing gambling revenue at all. I tell friends that are not gamblers myself, you got to make it to Vegas just because it's so over the top, exuberant.
Entertainment-wise.
The hotels are just beautiful, whether it's during Christmas, whether it's during whatever it is. the over-the-top nature of the money in that city is amazing, but it's not coming from gambling revenues. But man, oh man, Macau, they're up to $5 billion. You saw the China slowdown, brings it back to almost 2, and since then we're up 50%, up to $3 billion that they're pulling in. But man, oh man, I would not have been able to guess the difference before I had to. And I told you I was in the office last night, right downstairs at 6 o'clock. And sending you that chart because I said
it's hard to comprehend. I mean, it really is.
It's even being in the market, being gamblers, seeing how Wynn trades, it still blew my mind. And I think it would blow a lot of minds. Seriously.
Wow, unreal. Yeah. So, you talk about moves with Wynn and Las Vegas Sands and MGM. That was no doubt a smart move. Basically, get into Macau and they got in early.
Yeah.
Pretty intense, man.
Yeah.
No doubt. Pretty amazing. Notes and bonds out here are going to get interesting, folks. And the reason being is that what we did out here yesterday is that we went higher. That being said, this to me is not the type of volume that we need as we're going higher. And that's telling me that we're not done on the way down. So, this is going to get really intriguing. We have a high volume low that's laying out there in the 10 as well as the 30 from last Friday. And it's okay, are there going to be little fireworks out here tomorrow that, the bottom line is that, they'll cut rates, but what other surprise is going to be out here? That
press conference is going to be interesting, man.
Oh, it is. There's no doubt.
Because I'm sure there'll be talk, of course, about, what the ECB has done. Maybe. Yes. And I'm sure there may be some tweets from the president tomorrow as they come out, or even probably ahead of when the announcement is made. And, you're talking about the dollar, you're talking about the euro, and you're talking about the amount of stimulus in terms of $20 billion of euros, right? So 22 billion or so of dollars that they're buying in bonds, the ECB, on a monthly basis, basically indefinitely at this point. And how that maybe contributes to, and I'm sure Powell will say that, they focus on the U.S., right? That is the mantra that they're supposed to be preaching. But it's really difficult when you have a world economy and you have the ECB plowing so much stimulus into their own economy, affecting currencies, which then affects the American economy.
There's no doubt. And, I just put up the 10-year folks across the world, and you can see, you're still talking Germany's at 0.4 negative. You get France at 0.1. You got Sweden at 0.1. Forget Switzerland. Switzerland's at 0.8% negative. This is all in 10 years. And it matters. Yes. We're definitely in a world economy. I don't know what the exact number is on the S&P 500, but the S&P 500 certainly doesn't make all its money in the United States. You're talking about large multinationals.
I was just going to mention that I had told you yesterday, I heard some great analysis that, when everybody talks about yield inversion, right?
Yes.
They usually are referring to the 2-year and the 10-year. And we were inverted at one point. I don't believe we're inverted right now. But I heard an analyst, completely forget who it was, but they made a great point yesterday, I believe it was on Bloomberg, stating early in the morning that if you look at the 3-month yield to the 10-year, we have been inverted for 17 weeks. Now, I don't know if they're going to have the 3-month on that, which is a bummer.
They don't. See. Okay, they don't.
Yeah, but we all understand how rates work, right? If you lock your money in for a longer period of time, you're usually supposed to be rewarded for that with a higher interest rate. And for 17 straight weeks, the 3-month versus the 10-year has had an inversion, and that is another indication of a recession. And common sense says it would be. If you're getting lower rates for a 10-year, as opposed to basically like a money market, when it's just a 3-month, very, very short period of time it's tied up, that's stating that there's not going to be growth. And I hadn't realized, being in the market, I don't think anybody has, 17 weeks it's been inverted for a 3-month to a 10-year. So keep that on your radar. That's quite a point.
It's a big number, no doubt about that. We have the Dow Industrials right now down 42, folks. NASDAQ is off 8. S&Ps are off 1.5. We get gold down 220. That oil market, folks, that just keeps going south. You're down 388 right now. You're at 59.04. And let's just take a look at this for a second, because this will get really interesting that if we actually get below the lows of yesterday. We're almost there. This is crazy. The low of yesterday is 58.77. We've hit 58.91. How's that?
Man, oh man,
Shake it
seriously.
off.
Yep.
Shake it off. Stay
That's
right there,
right.
folks. Tommy and I are coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Tom O'Brien will be hosting a special 60-minute live webinar Wednesday night for Gold Report subscribers titled The Next Leg Up in Gold is $1,794. Find out why. In this 60-minute webinar, Tom will be discussing how the bond market moves the gold market, where the gold demand trends are coming from, how gold outperforms fiat currencies over time, how gold trades an average of $110 billion a day in value, along with many more topics. Subscribers to the Gold Report just closed out 3 positions in the last week for profits of 28%, 35%, and 51%. Now is a great time to sign up for the Gold Report. You don't want to miss out on the next big run in gold and gold equities. Sign up now for the Gold Report by visiting the front page of TFNN.com and get ready for Wednesday's live webinar with Tom O'Brien. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 42, Nasdaq's up 5, S&Ps are off 1.5. And one of our tigers wanted to look at Barrick Gold. Now, this is going to be impressive, folks, okay? And this is a big heads up as we come into this Fed meeting tomorrow. So Barrick Gold, okay, you know, been on a tear, as the gold equities have. We take a look at it. 3 months ago, it's trading $11.73. 2 weeks ago, it's at 20. Does a pullback, it comes right into its breakout area, and guess what? Someone's buying it out here hand over fist today, which is pretty cool, because the market itself doesn't have the volume hand over fist. The gold market doesn't have the volume hand over fist. This does. So that's saying quite a bit. If we go take a look at, let's go take a look at FNV for a second. So a couple of these, see, Barrick's been one of the strongest gold stocks out there. Okay, they're not buying Franco-Nevada. Let's go take a look at Royal Gold. Yeah, they're not buying Royal. So there's something happening in Barrick Gold, let's say. It's a nice setup. So,
yeah.
You know, we'll see how this shakes out. There's so many moving pieces, man, coming into the Fed tomorrow, man. I mean, it's like pretty wild, man, no doubt.
Seriously.
Let me just look at Newmont for a second here, because Newmont's moving also. So those are the two big monsters. Those are two biggest gold companies in the world, actually. And 3 million. Yeah, they're buying Newmont too, man. This is impressive. This is impressive. Those are two big companies. And if we look at the larger trades, oh, look at this. Yeah, you got some action here, man. So you had 81,000 on the open. You had 57,000 before the open. And you get a lot of 30, 25, 15 numbers in there. Yeah, you get. It's not me and you buying it, Tom. 80,000 shares at a whack. Yeah, totally. Folks, you stay right there. We got our man, Kevin Hicks, Think or Swim, coming up next. Then our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal. Have a great one. Have a great one, folks. Have a safe one. Stay right there.